Imagine being able to predict the perfect entry before the market even moves. In this video, I'm revealing a powerful new fair value gap indicator that's perfect for both beginners and seasoned traders. Whether the market is trending or flipping direction, this tool gives you two high-probability strategies you can start using right away. You'll learn how to catch strong bullish and bearish trends with precision, and also how to identify early trend reversals before they play out on the chart. Later in the video, I'll show you a live chart breakdown where this indicator nails the move before it even happens. You don't want to miss that part. So if you're serious about leveling up your trading game, stick around, and hey, if you find value along the way, drop a like, subscribe, and turn on the notification bell to get notified when we upload a new video. It really helps the channel grow. Now let's get into it. So, to get started with this indicator, head over to TradingView, and then choose any trading security that you like. It could be a stock, crypto, or forex pair. And then you will select your preferred time frame. Next, click on Indicators and search for the Breakaway Fair Value Gaps. It's going to be this one that was created by LuxAlgo. Now, you might be wondering, what exactly does this indicator do? The Breakaway Fair Value Gap indicator by LuxAlgo is designed to detect and highlight key fair value gaps that appear during moments when price breaks to new highs or new lows. These are powerful spots where momentum surges and price often behaves in a very specific way. But to understand why this matters, let's break it down even further. So, what is a fair value gap, or FVG for short? An FVG is a visible gap on the price chart where no trades occurred due to a rapid price movement. This creates a market imbalance, a key clue for traders. Here's what it looks like. This is a bullish FVG, and this is a bearish FVG. But what makes a breakaway FVG special is that it forms while price is breaking out of a recent range, either to a new high or a new low, showing intense buying or selling pressure. So, here's why you should care about breakaway FVGs. This is because the FVGs often represent critical moments in the market, areas of overextension or imbalance where price is likely to react. Traders use these gaps to predict either a continuation of the trend or a potential reversal as the market rebalances. Let's walk through the indicator's parts. First, you'll see bullish FVGs marked clearly, with a line underneath known as the mitigation level. In a bullish FVG, this line is the bullish mitigation level. For bearish FVGs, you'll see the bearish mitigation level. What is mitigation, you might be asking? Mitigation is when price comes back and touches or crosses this line, effectively closing or neutralizing the gap. Next, take a look at this data table. It's where the magic happens. Here you'll find a setting called max bars, which by default is set to 60. This means the indicator scans the last 60 candles to find relevant FVGs. It also tracks how many of those FVGs have been mitigated or not, and that is whether the price returned to them. The table shows the percentage of bullish FVGs that got mitigated, percentage of bearish FVGs mitigated, and the average number of candles it took for that to happen. So these stats are super useful for strategy building. For example, if you're trading a bullish trend or catching reversals, a high mitigation rate tells you that the price has a strong tendency to return to those FVGs, which can help you plan profit targets more confidently. When you go to the indicator settings panel, you'll see options like trend length, which controls how far back the indicator looks to identify breakaway FVGs. You can toggle mitigation levels on or off, adjust the maximum duration for tracking gaps, and even customize the color scheme or dashboard layout. Once you're happy, click OK. For now, I'm sticking with the default settings. Now, let's check out the Batunix Exchange. So, if you're serious about stacking wins in this market, you cannot afford to sleep on Batunix, the exchange that's blowing up for all the right reasons. Everything you need is right here. Instant access to spot trading, futures trading, copy trading, and even bonuses for new users. It's like having a Wall Street grade trading floor, but right in your pocket. In the markets section, you're spoiled for different choice. Bitcoin, Ethereum, hundreds of altcoins and meme coins, you name it. Prices update in real time with no lag and no delay. Depositing is super simple. Just head to the wallet section, select Deposit, choose your crypto and scan the QR code or copy your address. Funds usually show up within seconds or minutes, making it one of the fastest deposit systems out there. And here's where it gets juicy. The futures trading. Leverage up to 125x for the real traders. You can set your strategy with limit, market, or trigger orders, adjust your leverage on the fly, and stay in full control with clear P and L tracking. It's fast, it's fierce, it's built for winners. Why Batunix, you might be asking? Well, you will get rock-solid security when you start using Batunix Exchange. Stupid low fees, that will allow you to keep your profits. Lightning-fast trade execution. 24/7 customer support that actually cares and massive rewards programs dropping all the time. And Batunix isn't just playing the short game. They've got staking, launch pads, new projects cooking behind the scenes. Meaning, if you're here early, you're getting in before the next big wave. So why wait, when the future of trading is already here? So, click on the link in the description below to sign up now, grab your bonuses, and let's dominate these markets together. Batunix Crypto Exchange is where traders are made and legends are born. Now let's move back to the video. Now let's move to the first trading strategy, which is going to be the trend continuation. For this, you'll need a basic trend indicator like a 100-period EMA. Here's the setup for a long trade. First, you have to make sure the price is above the 100 EMA, which indicates bullish trend. Then you will wait for the price to pull back to a bullish FVG and touch the mitigation level, and that will be your retracement. After that, you will look for a bullish engulfing candle at that level. And finally, you have to confirm that the bullish FVG mitigation percentage on the table is above 70%. If all that checks out, enter a long trade, place your stop loss below the most recent swing low, and set your take profit at 1.5 times the risk. If you let the trade run, and as you'll see here, it paid off nicely. Now, for a short trade, you just have to reverse the conditions. First, the price should be below the 100 EMA. Then you will wait for a retracement to a bearish FVG. And after that, you will look for a bearish engulfing candle. And finally, you will confirm that the bearish FVG mitigation is above 70% before entering. And there you have it. A simple but powerful fair value gap indicator that supports both trend continuation and trend reversal strategies. If you want to try it out, search for Breakaway Fair Value Gaps by LuxAlgo on TradingView. Go ahead and join our Telegram channel and get access to high-quality, expert-curated trade signals every single week, but that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently, so click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned, I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.